Hey Ryan, why don't you pull up Amazon's margins real quick?
Well, I'd have more of a grin on my face than Stephen Hawking on Epstein's Island.
I'm off as a smug cock when you said that.
Wow, fiscal philosophy, you're not very smart at all. You screw up, cash flow kings. Dissector, I just exploded.
Hello, everybody. It's Saturday. It's 8 p.m. Eastern. And on Saturday, 8 p.m. Eastern, you could be doing a plethora of activities, gatherings.
It's true.
More activities. You know, you could do a whole lot of stuff on Saturday, 8 p.m. Eastern, whether it's good or bad. That's for you to decide. But there is one thing that's for sure, and that is it is a very good activity to be coming to the Cash Flow Kings Live, 8 p.m. Eastern every Saturday. And today, it's our 30th episode, so it's going to be a bit of a special one. And we have Blake Downer in here. Going to be an absolute blast tonight. And stuff's going to get real. You know, past the 9 p.m. hour, you guys know anything can happen here on the Cash Flow Kings. Like past 9 p.m., it's like we usually go PG-13, maybe TV-14 if we're feeling frisky, but like tonight's going to be real. I have a song that Fiscal has not heard yet that we will be playing. And
you'll get my live reaction, guys.
Yeah. I didn't play it for him yet. It's like, you know, we're going to be getting very real tonight. It's our 30th episode. We're going to share some of the future plans. Big night overall. This week I'm poor. I feel what it's like to be a value investor, Fiscal. This is not a good feeling, but you know,
you've been using the falling knives method.
That's true. But Fiscal, you know, since it is Saturday, 8 p.m. Eastern, people could be doing a lot of things right now. I can only imagine. What are some of the things people could be doing if they're not here 8 p.m. Eastern?
Well, they could be cruising the downtown, going after thoughts in the club.
Yeah.
Negative cash flows, what my dad calls them.
Definitely.
They could be sipping on the alcohol, tequila shots. I've heard those are a thing. They could be doing absinthe.
They could be at the casino. They could be doing they could be popping pillies, doing a few perks, trapping in the trap house,
eating trenbolone sandwiches,
injecting Clorox, bleach, bad stuff. But all that matters that you're Saturday 8 p.m. Eastern Cash Flow Kings. Before we get into that, smash the like button for us. If we can break like 50 viewers combined tonight, it could be big stuff. We need the money at this point. Like, you think I'm joking when I say we need the money soon. Fiscal is about to put a security deposit on an LLC formation, and I've lost by half my net worth in Starbucks stock this week. So it's not good. It's not bullish times here for the Cash Flow Kings. But looking at the chat, we have PP in here. Great name. Gators Rock Tea. I'm sorry that you heard me cough. I didn't know that I was on stream, but thankfully I wasn't doing something else and you heard me in the back. This guy's like the greatest troll ever. He says just funny stuff and I love it. And it's got to be a funny troll account. Luis in here. Welcome in, Luis. Is that who I think it is?
Dissector, you are an idiot.
Welcome in, Dissector from Twitch. Cabo. I saw he was in Commerce Live today. Actually, I pulled up and I saw it. Our slave editor is at work right now. We can't believe he's actually still working at Wendy's, guys. So, you know, subscribe, turn on post notifications for the Cash Flow Kings. Keith Allen in here. Fried muffin. It is an absolute treat. We have Eddie in here. And also, we have YieldMax TV. YieldMax TV, he's coming on our show in 2 weeks. It's going to be a good episode. He drives around Lamborghinis. He has a gold digger wife. He's the man. I have to acknowledge it. So that's going to be a good episode. That I'm going to go on record. That will be our most vibrant episode yet. Value-wise, you know, that might be one for the entertainment folks. Yeah, it's gonna be really good. But I think without further ado, we let in Seeking Alpha Quant Analyst Blake Downer. Welcome in, Blake.
How are you guys doing tonight?
You're an actual Seeking Alpha Quant Analyst too, right?
Well, I'm not a quant analyst, but I am an analyst in the sense that I'm like a freelance author who hands out free financial advice.
There we go. With the Seeking Alpha Quant Analyst jokes could be flying tonight, guys. I'm just saying. Yeah. For those who know, they know. But Blake, it's an absolute pleasure to have you on. We were on your podcast a few weeks back, proving great returns. That was a fun time.
Yeah, and since then I have started reading One Up on Wall Street.
Oh, excellent. Yeah, that's the first place I send everybody to. If you want to get into investing and you don't want to just buy index funds, the first place I send people to is Peter Lynch.
And since then, High Tide stock is up like 50%. So we should have all listened. We would have.
Yeah,
It's a lot better than Starbucks.
I believe with serious conviction in my High Tide investment.
There we go. Blake Downer is my spirit animal. And I'm going to go on record and say it here first. I'm already getting confused which he was Fiscal and which he was Blake. You guys are lookalikes. I've heard that it's Fiscal and fake Fiscal, but that's for the viewers to decide.
I did shave today, so that should help clear things up a little.
Thank you.
I'll never shave.
The folks who are on podcast at Spotify don't get to experience this, which gives me another plug here. Follow our Spotify. Give us a 5-star review and say that Fiscal and my voice, we put you to bed every night, and that will be just premium. Stabulo in here. It's going to be an absolute treat. We have a lot of stuff to get into tonight. That is right. Hit the like button for us. We could get into the commerce stuff early, but I think, Blake, what we typically do, we like to ask our guests on the Castle Kings, what is your game? What do you personally like? What would you describe it as?
So I'm a growth-oriented value investor. So a lot of people, when they talk about value investing, they mostly talk about investing into fully mature companies. Like, for example, you're into Starbucks. That's a mature company. However, I mostly focus on small caps and micro caps. And a big part of the reason why is because of market efficiency. I took a couple years of economics classes about 25 years ago. And one of the things I was sold on at the time, but I now know to be false, is that markets are efficient. And the truth is that the larger the company, the more analysts are covering it, the more it's a company that is everybody knows, like Tesla and Google and Meta and all that stuff, the more efficient it is. And the more obscure it is, the less efficient it is. And so I also disagree with all my economics professors about volatility. They all told me that volatility equals risk. And when you talk to like portfolio managers and stuff, they believe that risk is beta and beta is risk. And that is just absolutely not true. Risk is, how I define risk is more like how Howard Marks does, where risk is the potential for a permanent loss in capital. And mere volatility won't hand that to you. Another Peter Lynch famous saying is you buy damaged stocks, not damaged companies. And that is one of the core, I don't know if it's a quote, he actually said it, but that's one of the core lessons he teaches people is if the company does well, the stock will do well. And so I tend to hunt for obscure small caps and micro caps. I will occasionally invest in something larger, but for the most part, I'm looking for those like diamonds in the rough that other people haven't noticed yet, And another Peter Lynch quote is you got to turn over, I think it's something like he who turns over the most stones wins. So you got to do a lot of reading, you got to do a lot of research, and you have to stay inside your circle of competence. That's one of the core lessons that Charlie Munger and Warren Buffett preach, and it's so true. So for example, I know you guys want to talk about MPW a little bit tonight.
Oh, speaking of diamonds in the rough.
Yeah, so I went ahead and took a look over their financials today, and within about 5 seconds, I was like, oh, crap, I can't hand out good advice on this, one way or the other, because it's a REIT. And I've been avoiding REITs for years, and I don't actually have a very clear understanding of how to read through their financial statements.
Well, if we had our REIT analyst here, it would be a lot easier to dissect it.
Yeah.
Unfortunately, so that train is passed.
Yeah, I mostly focus on retailers, manufacturers, service providers, energy stocks, renewable energy, so like wind and solar and stuff like that.
NextEra Energy?
Huh?
NextEra Energy, do we consider that wind solar?
I wrote an article on them. They actually are one of my best performing picks, like from Seeking Alpha is. And you can check me out on Tip Ranks and take a look at anything that you see under my name on Tip Ranks. I can talk a little bit about those companies because I researched them in the past. So if I remember correctly, when I looked at NextEra Energy, they were projecting significant cash flow increases, and so I gave them a buy rating. I mostly use the PEGI method, which is another Peter Lynchism. You take the PE ratio and you put that on the top of the fraction, and on the bottom of the fraction, you put their long-term earnings per share growth expectations plus the yield. And a lot of the rest of the market participants, when I talk to them, they've heard of PEG. They've never heard of PEGI. So the reason you want to also add the yield in and divide out by the yield is because any cash that the company makes that they pay out to shareholders, that's less cash that they have to grow with, and so PEGI is really good for measuring growth companies. It's actually not super good at measuring like mature companies. So like if I had to try to do a PEGI on Starbucks, it would probably tell me that it's dramatically overvalued. I don't.
Yeah.
Yeah.
Especially with companies like brand value that's heavily priced into it too.
Yeah.
Nike, Coke.
And I don't even know how to do a PEGI on MPW. I wouldn't trust the numbers I'm plugging in there. And a lot of that has to do with I just don't know how to read those financial statements.
Yeah.
I took 2 years of accounting and we covered that stuff for like a week. And I just sort of right over my head. I didn't bother to pay much attention to it.
REITs have to be valued in kind of like a particular way, I suppose.
You are just buying buildings on land. Oh, that's you are
And
just buying buildings on land.
Yeah. Well, I am into real estate investing, but like not REITs. And a big part of the reason why with not REITs is because they're obligated to pay out about 90% of their income to shareholders.
Yeah.
So what are they ever going to use to compound or grow? Like basically the only time they can really grow is when they do a share offering and they dilute shareholders to buy more real estate. So I'm attracted to long-term compounders. This is a big part of why I try to choose companies when they're small, is because they have to have strong growth potential for me to even be really interested in them.
Yeah, Joseph Carlson kind of ruined the term compounders for me, so we're trying to find like a new word to replace it.
Yeah, I'll try to avoid using the term.
It's early in the night, Blake. It's okay. We all have mistakes and blunders. We got Hog Farmer, who is one of the top cash flow kings haters, and we love our hate comments. It is really suspect that you guys are all afraid to show your eyes. Well, the only reason we do it is so that people like you don't fall in love with our eyes, our pearly eyes, and potentially save it for later. So inappropriate stuff. Hog Farmer, do better. We got to get some better hate comments in here. I feel I've been seeing some weak ones recently. Fiscal versus Blake for a push-up competition. Hey, that's if we hit 500 subscribers. Maybe it'll happen.
I used to exercise a lot because I wrestled all through childhood. Ryan, I think I heard that you are also a wrestler.
Grappling, submission grappling. Yep.
Oh yeah. I did folk style from when I was 6 until I was 18.
Nice. I'm currently on a weight cut right now, so my temper has been kind of cut short, as some of you may have noticed.
I once lost 16 pounds in 5 days to make weight.
Oh, sauna? You do sauna?
No, I cut my breakfast down to about 600 calories, and then I cut my lunch down to about 400. And we were burning. Before the week before that, I was eating about 6,000 calories a day just to maintain weight. And then I think people aren't used to wrestlers' exercise ethics. I mean, when I tell people I used to exercise for 5 hours a day, they're like, "How did you do that?" And I'm like, "You just get used to it."
Yep. It's crazy. It's crazy what training for multiple hours a day will do. I had a buddy that was a high school wrestler, and he was like a little over 6 feet tall. His calorie requirements were absolutely absurd.
Yeah, I have to. The thing that sucks at this competition I'm doing too is that I have to weigh in with a uniform on, which is like an extra 3 pounds. So I started the creatine part of the water cut, and that's actually gone really good. Like I've lost probably 2-3 pounds of water weight this week. So we're seeing how it goes. But yeah, I've never until about last summer, I've never like wrestled or done any grappling before. And I just loaded up on wrestling clinics, over the summer, and it's your cardio is just different after. It's the conditioning's disgusting how hard it is.
Yeah.
Fiscal, I don't think you understand because I went from like just training bodybuilding or lifting to doing that. It's different. Like it's
No, I understand that like more athletic train, like bodybuilding is not athletic in the sense of the way you train if you're actually doing like a competitive sport where you actually have to like hold like another person who is trying to resist you kind of thing. The weights, they resist you, but it's just gravity and it's one directional,
You got a spotter.
It's a whole different thing. I don't need a spotter.
Yeah.
So wrestling will give you a confidence and a sort of determination in your own capabilities that nothing else will.
Yep.
By the end of this, Ryan, you will have more confidence in what you can do because you have already done the impossible at least once.
It also mellows you a lot too. Believe it or not, when you're not cutting weight, it also mellows you a whole lot more. Like you don't got
when
that.
You're not cutting weight.
Yeah, it's definitely you're just more chill. Like you don't need to trying to prove a point that you're tough or whatever. It's nice. It's a hidden confidence that like I think only people who train the sport would know. Good wrestling talk and start off the cash flow kings. This I like this. Forget investing. Let's not even talk about Starbucks. We keep talking Starbucks. No.
So we can shift into Starbucks if you want.
We might as well.
Sure.
Rough. I feel disgusted in myself.
Hey, for once it's somebody else's stock that's dropping and not mine. So
I know. I'm waiting for like somebody to make a petty
walk
comment.
a mile in my shoes, Ryan.
Yeah, it's I overbought.
So Starbucks made the fatal mistake of expanding into China.
Really?
And China's been in a horrible depression for like the last 2 years or so, and I've been bearish on everything China since the lockdowns, really, but super bearish over the last 2 years because their economy just went into the gutter, and you don't want to invest in a place where the economy went into the gutter. So I've been avoiding Chinese companies for a long time, for like 2-3 years now.
Fiscal's getting ready to answer this question on behalf of me as an Alibaba shareholder.
I mean,
Alibaba. Oh no.
Oh yeah.
One could say we are China bulls here. We love China.
I'm not saying I love China, but Alibaba is undervalued and still, like, I think they're growing internationally. The Chinese segment maybe isn't doing so well, which is their domestic segment, but
Starbucks is 50-50.
Yeah, but Alibaba is not as mature a business as Starbucks, I think. So I think if and when the Chinese economy starts to recover, Alibaba will benefit greatly from that.
Yeah,
so
well, both companies should do well during the recovery phase, but I don't know when the Chinese economy is going to get on its feet.
So that's the thing. No, I think if you did know when, you could be a billionaire with that information.
Oh yeah.
Yeah, I think with Starbucks, like there's such high upside, but right now you're seeing the downside, right? It's one thing that is positive for me though, qualitatively speaking. I know China's economy is in shambles right now, but like Starbucks is still, their brand value is high in China. They're the number one go-to coffee place in China besides making it at home. So that's a positive thing for me to see. Some people like Joseph Carlson didn't want to mention that. We could talk about that, but no, I mean, with the earnings report, I think they had a lot of pressure on them in the first place due to all like the protests, Palestine trying to find a corporation, the college students are mad. There's a lot of pressure on it in the first place. They delivered a lousy quarter. Then it was down like 10% after the earnings. And then the CEO, Laxman Narasimhan, which Fiscal we've talked about, like he's charming. We like him.
He strikes me as like a pretty good salesman type. Like I said, I think my remark on him, like a first impression after watching one clip of him talking is, dang, listening to him talk, I kind of want to go to Starbucks now, or I kind of want to buy Starbucks after hearing him talk. It was something to that effect.
So financials were not good. Like I don't think there was like anything like growth or positive regarding the financials. So that Laxman goes on Jim Cramer, CNBC, and he just gets flamed. Like Cramer, I've never seen Cramer like attack somebody as much like he did with Laxman. He was
bad if Kramer's running circles around you. I got to tell you that.
I know. And people are like laughing at both Cramer and Laxman. Like people are pointing blame to both sides, but like Laxman looked like a deer in headlights, dude. Like it was not good. And I just think it's a time right now where sentiment is not very high with Starbucks. There's also people who are not happy with the management whatsoever because people are like saying that they're lying about market share in the United States and that other brands are saying that they have retained market share in same store sales. People are like, it's not good times to be a Starbucks shareholder. With that said, though, there's a lot of hate, and I think Starbucks is poised for a comeback quarter next quarter. If anybody wants me to also go over the positive things as well, I did write some things. Yeah, see this might live on forever because this was like the first thing I was hearing after the day. At Starbucks, because I didn't say it. I don't believe I said Starbucks couldn't go to 75. I thought it was unlikely, right? Fiscal?
So, I mean, my recollection of that conversation regarding could it go to 75, like you and the dude had you guys, like, I promised before the show I would come up with a price at which I would buy Starbucks stock, right? And like back of the napkin, just kind of quickly looking at everything, I was like, probably 75 is where, you know, it piques my interest. And both of you kind of like gasped and like stuff a little bit.
Yeah.
And I mean, but no, like I think you were like, I just don't see that happening or something to that effect. And
I mean, to be fair, who saw them dropping 17% in a day?
Apparently I did. I don't know.
Yeah.
But and yeah, no, I think the dude had said I just don't think that that's possible, or something to that effect.
Huh.
Yeah. And he even, you know, tweeted recently, who would have seen it coming that Starbucks could get this low? And I'm like, well, I mean, like one person did that you talked to.
I could see it. Somebody needs to make a meme of the dude that's like, yeah, I did not sign up for this.
And I just think, like, in a world, and I think, like, after I explained it, you both settled down a little bit, but like in a world where Meta can drop to $88, certainly Starbucks can get to 75 or even lower.
All right,
in that world.
Yeah.
Right.
So here's here's my thing. Nobody saw it coming. The stock was already down like 20% from its like over the year when it was trading in the 80s, right?
Yeah.
I mean, it's still,
isn't it still like over 20 times its trailing earnings though? Like, is it still
trading at a 19p ratio?
I mean, that's not like dirt cheap or anything, you know?
I mean, for
a mature company.
I mean, but if you look at the growth that's projected to go through, though, like long term, still like the 55 stores.
But that growth, how much of it's in China? Which, if we all agreed that we're afraid enough of China to maybe avoid something like Baba, why are we buying something where a bunch of China growth is priced in? That was my whole thing.
Yeah,
feel free to check my sanity on that, though.
It makes sense. I mean,
so I just did a PEGI estimate on Starbucks. Intrinsic value is around $58 a share, and that's based off of the
recent earnings.
Recent earnings, yeah.
Okay, yeah, that makes sense.
So it was higher, 2 weeks ago.
Yeah, all right.
And also when you do PEGIs, that's the value for one, and in fair value is typically considered to be anywhere between 1 and 1.5.
Okay.
So if I multiply that number by 1.5. It's the top end of intrinsic value is $87 a share. So it's currently trading pretty close to its intrinsic value.
Now I wonder if you did that a few weeks ago, what it would have been. And I wonder if there's I don't know if you could do this, but if there's like something you could do off long-term numbers still, because I mean, I think my whole thing with it is like fiscal. We talk about it like quarter to quarter earnings. Like that's stupid. Like you should be paying attention, but if you're really investing for the long term, if you really are, like, you should not be shitting yourself quarter to quarter.
Though, I mean, to be fair, like the numbers I ran, I just used the DCF, say what you will about those. And I think it just comes to like, I used assumptions that I think are a lot more reasonable, because they like the standard DCF calculators, a lot of them, they want you to put in like what you think the growth rate will be for like a decade, right?
Yeah.
Well, I don't think you can assume 12 or 15% growth or whatever for a decade. Like, even putting in 10% with a 10% discount rate got me to like 75. And like, I think even that's kind of generous, to be honest with you, for Starbucks, because is it going to be 10% growth for the next 3 years and then it drops off? I don't know what point it drops off at. A lot of analysts think it's going to be like 13-14% or whatever for the next 3 or 4 years, but that seems like that's out the window now after this most recent, right? So basically, that's why I think you've got to go, especially for like really long time frames, you've got to like really consider like what happens if one of these years absolutely sucks. That can drop down that average quite a lot.
Yeah. Now I'm telling you, dude, next quarter is going to be like, do we have any predictions? I know it's stupid. This is so stupid. You think Warren and Charlie are around a table at Berkshire's annual meeting? What do you think Coke gonna do quarter 3? I bet they miss.
Yeah, I don't think they care one bit. So they invest in strong brands and strong business models.
Yep.
And that's one of the one of the core lessons I've come to understand is like, well, have you guys taken calculus? No? Okay. So there's this concept in calculus called a derivative. And anybody in the audience who knows calculus will understand what I'm about to say. So the derivative of the share price is the financials, and the derivative of the financials is the business model. And so if you have a strong business model, strong brand, all that, you will eventually achieve strong financials, and that should lead to an elevation in share price.
I saw Joseph Carlson today. I did a reaction to his video. It's coming out tomorrow. And like, I said, fiscal dude, I had to hold myself back from like going full out like Target 2.0 mode again. But he was like, they don't have enough money to buy back shares. He was like explaining how basically like if you buy back shares, it will spike up the price through earnings per share. And it's like, you should be looking for good cash flows over time. I understand they should be buying back shares because that's what a smart business would do if they fell at like 17%. But it's, Joseph says we're on a caffeine bubble, and like I had to take a moment just to.
Is he in Celsius also, or is it just
no?
No.
Man, Joseph, dude, I just want to support the guy, but some of the stuff he says, it's just like, man.
Yeah, I don't know. I mean, I don't. I think as far as like people on YouTube go, like, you could do so much worse than Joseph Carlson that I'm gonna avoid giving him a hard time on this one.
Yeah, I'm with you. Do we think that the 17% sell off was warranted, or was it overreaction?
I think it's warranted.
Yeah, probably warranted. See, larger companies, everything's more efficient.
Yeah.
There are dozens of analysts covering it. There are dozens of analysts projecting the future out on that company, people that are specialized in that industry, people who theoretically know what they're talking about.
But I would have said it was warranted before the earnings release because you heard my price target before that, right? Like,
that was before that. Oh,
yeah, I was going to answer warranted no matter what. Yeah,
fiscal, you bought some though. You're now
I bought one. I bought one share. I promised you that I would buy at least one share if my like target came true. Yes.
No, fiscal. No, this is the first comment I see. Mike the Tactical Shoe Shiner was hating on you slugs today. I think he even called me a slug. Wow. Go flip a hamburger, dude. Like you're nearly the age of 60 or whatever you look like you are.
He should tell his teenage coworkers, employees, whatever they are, more about his YouTube channel and watch their eyes glaze over a little.
Yeah, tell that broad in the back to come see me. Get the fuck out of here, dude. Sorry for the language. Let's see 8:30, 28. This is already happening. See that. Yeah, that's true, Dan. I should be investing in stakes. And like he kept like relating it to Texas Roadhouse, and I'm like, oh my god, snap. No, I mean like, I still support you, Ryan, even though thank you, Guff. Me and Guff will break each other's balls sometime. Yeah.
So you're in Starbucks. Have you looked at Dutch Bros?
Oh my gosh, I'm getting.
That sounds like a yes.
I'm getting. I mean, I look at their financials.
I bring it up sometimes. Yeah. I do bring it up sometimes because we have Dutch Bros quite a bit. It's pretty popular here in Phoenix. I don't think they're everywhere yet. They're a lot smaller than Starbucks. Yeah. But all right, just some boots on the ground due diligence for you guys. The lines, like I used to live very close to one and pass it on my way to work sometimes. The line when they open is like backed up around a city block. Yeah. That's
a good sign.
I think that's a good sign. Yeah.
Do they have a drive-through?
Yeah. Yes. Yeah. The line is literally backed up in their drive-through line, like a city block of line of cars just wrapped around the place. It's
how is it a couple months? How is it a couple months after they open?
Sorry.
How is it a couple months after they open? What does the line do after people have had the chance to try it?
So as far as I know, I mean, it was like that the entire time I lived near the place, and it had been open before I moved there. But this is like, this was like 2017 though. So like, I haven't been back like to check the place out since then. But
Fiscal, why don't you tell them about the viewers about the business model too? What gets the Gen Z people in there?
So what I've heard is that it's more popular among Gen Z people because they actually hire like socially outgoing and attractive people to work there that will like converse like with people that come in, and I guess going in and getting to like have like a social interaction with somebody that's like low pressure, but like positive,
Yeah.
is good for the really anxious and shy Gen Zers.
Okay.
And
Yeah.
so they really like going there apparently. Like I don't necessarily like firsthand understand that, but like it makes sense from what I've heard about some of the differences between my generation and Gen Z. So
Blake,
Right.
do you own any? That laugh tells me you do with how packed they were.
I don't own any.
Okay.
I have. So I didn't even know they existed until about 3 months ago. Because I live in the Midwest. There's no Dutch Bros anywhere near me.
yeah, I gotcha.
And so somebody else brought them up, and I was looking over their financials, and the person who brought them up was giving me the pitch on how like they're going to put up like 800 new stores in the next year and all that stuff. And I'm like, well, that's cool. I like a good growth story. And then I look at their financials, and I'm like, they're kind of growing too fast right now. If maybe a year from now, maybe 2 years from now, they might become an extremely attractive investment. But for me right now, I can't touch them yet.
Is it true their PE isn't actually 90? Somebody fact check that.
90 PE. I can't touch that.
I got to look at that now.
If
Steve from Car Simplified is getting it for me if this is true.
Yeah, if you have a 90 PE and you want me to buy you, you better be doubling your revenue every year.
Oh my lord! I think it's even high. It says 985 on Google.
Yeah,
That's not true. That can't be.
I mean, that's based on GAAP though. Like there could be some adjustments or something. But yeah, if you get to the point where you're close to like looking at it, I can definitely drive out and see if like they're still like as busy as I remember them. I'd be willing to do some boots on the ground for you, take some pictures.
Seeking Alpha says their forward PE is 117.
There you go. They grew a little bit. Yeah, I think so. Back to Starbucks though. For anybody that cares, I did write some of the positive characteristics that I took away. Because I listened to the earnings call, because that's what somebody who has half their net worth tied up into the company. And no, I don't actually, for people who actually think I do. So essentially, positives that I saw take away. Brand value still appears to be high. Their new lavender drinks, which are apparently like the spring, themed, like how they have like the pumpkin spice, the lattes, the Christmas drinks. They have like a spring one now, and that's apparently doing just as well as the fall drinks. That's actually a really big positive that I saw. It just appears that they did a really bad job with like price hikes. They just kind of. Fiscal, we've talked about the term effing around and finding out recently. And I think they may have gone a little too aggressive on the price hikes, and they're seeing less demand like in same store sales. So that's what it looks to be. They said that it was a miscommunication of providing value to customers. Time will tell how that is. But yeah, I'd assume they actually drop prices. I think that's a possibility, but I'll let you guys know on my order, because I went to Starbucks yesterday and the price was still the same. It was packed, by the way, through the drive-thru and in the afternoon. So bullish stuff there for me. Just do we still think it's a solid long-term dividend growth play?
I think so, but you might have to deal with some volatility between now and then. And remember, volatility is not risk.
Oh yeah.
Yeah.
We buy the dip here on this channel. We buy the dip.
Yeah, if you believe in it and you have conviction, buy that dip.
I'll stand by what I've said all along, Ryan, and that if your strategy is to hold on to something and want it to still be there in 30 or 40 years, probably Starbucks will still be there in 30 or 40 years and paying you more than what it is now. So from that perspective, I think you'll be perfectly okay.
All right, I'm selling all my Starbucks now. I'm joking. The inverse fiscal, but yeah, it's gonna be really interesting to see what happens with them. Like I'm not nervous at all. The only thing I'm nervous about is not having enough cash to buy the dip, to be honest. Like I did my portfolio update today for the month of April, and I was buying a lot of Starbucks before. I was like ashamed of looking of how much I bought compared to like where it's at now. $50.85, $40.86, $35.87. It's like, oh. Yeah. I didn't think
that is one of my fears too, is that something I'm in will drop significantly and I won't have enough cash to buy the dip.
So I burned through cash. Like I was sitting at like 1,300 and now I'm at 600 the other day. So I'm like, oh, fuck. So everybody, I'll bring you some breaking news here. I sold out of Berkshire Hathaway, which I only owned one share. It was my first ever stock that I bought. I sold it at a 92% gain. So
Nice.
I'll take the gains.
Unfortunately, it was the Class B stock, so don't go ahead and line up the money.
Yeah. I sold at a gain. I really didn't see myself buying to it or adding to it anytime soon. It just didn't make sense. I'll definitely add to it if it goes on a bit of a dip, but
Well, plus now that Charlie Munger's gone, and Warren Buffett's not young. He's probably going to croak at some point in the next 10 years. As much as I want him to live forever and keep handing out wisdom forever, he won't be with us forever. And when he dies, probably
there's going to be a sell-off. There's going to be a sell-off.
Oh yeah, because people are there because of him. Him and Charlie.
I think that'd be a good buying opportunity because they don't really. I don't think they make a whole lot of the transactions these days. I think it's the brothers Todd, and I know Todd. I don't know the other one though. So.
Ted, isn't it Todd and Ted? Isn't it?
It's got to be something like that.
Yeah.
But Ryan, you're gonna get those sweet dividends. It's like I think it got like my portfolio's 22 and a half. I keep 1,200 right now, so that's probably like 4 or 5%. I gotta add more. YouTube pays.
Berkshire's refusal to pay a dividend is a big part of why they were able to compound.
Yeah. I can respect that. He dumped some Apple shares. So did Joseph Carlson. And Dividend Dude was complimenting it too. So
what a coincidence!
Might be the move. Yeah, that's I hate to say that. That's such a bitch made thing to do to sell out of Apple. That's especially if you're like, I'm sorry, like it's probably the best you can get in terms of quality. It's like you just gotta buy it when it goes on a decline.
So Apple just announced a massive buyback, right?
Oh, yep, 110 billion.
So when a company does that, it's usually a signal to me to leave.
Really?
Usually, also when they start offering a dividend for the first time, because what that really says to me is I don't have anything better to do with this money, so I'm just going to inflate the share price with it. And because I focus on small caps, micro caps, growth stories, companies that are rising stars in their industry. And by the time they're paying a dividend, that's usually the sign for me to get out and go find something else that's a grower.
The only reason I'm going to defend Apple here a little bit is that they've always done buybacks. They've done them for like the last, they're literally known for them where they've been doing it for like the last 10, 15, 20 years, really aggressive, where it's not like something where it's like they suddenly start doing it and it's like, all right, I'm getting out.
Well, and it's buybacks have worked out really well for Altria Group. They've worked out really well for Dillard's. Are you guys familiar with Dillard's?
We know Altria. I don't know Dillard's.
I bought a really nice outfit at Dillard's.
I didn't even know Dillard's existed until like 2, 3, 4 months ago. Look up Dillard's on like a 10-year chart. Just humor me here for a minute. When chart.
We only look at 5-year performance here on the cash flow.
5-year, 10-year, whatever you want to look up. Just don't look them up over like the last month because that won't show what I'm talking about.
DDS, yeah.
Okay. Yeah. So I'd never heard of them until kind of recently, and then somebody brought them up in a Discord chat, and someone else was like, "I thought that company went out of business."
Get Joseph Carlson on this stock, guys.
Yeah.
Oh my lord.
It's like a sort of semi-upscale department store type thing.
Okay. And so what really happened is they just started this really heavy buyback program, and they were buying back shares left, right, and center. So their earnings per share shot through the roof, and thus the share price went up. Like it's rocketed. So buybacks aren't always bad. Like if you're in a mature company and they start buying back for the first time, that doesn't mean I have to leave, but that usually is a sign that I should consider it.
And Apple increased their dividend 4%. So I'm sorry to all the dividend focused people. I think tax efficiency is something else that Apple loves with the buybacks as well. But before we get to our next topic of conversation, we have 60 total people in here, which calls for only one thing.
Dissector, you are an idiot.
Smash the like button for us, please. Or follow us on Twitter. Both. I don't care. What WTF? This DDS looks dangerous. I won't touch this.
Oh yeah, I'm not buying DDS. I'm just saying like this is what buybacks can do for a company. Like it is possible for you to get massive returns from a buyback story.
I normally love touching double D's. Well, everybody wait till our recap of episode 30. It's gonna be big tonight. John comes in and says Apple is trash, no innovation, and sue with the government. Disagree. I've seen some people trashing on their innovation recently, and I disagree. I think Apple's one of those companies that they are always going to find something else that's going to top what they've done. I think that right now you may not be seeing a lot of it because they kind of scattered those plans to the Apple Car, but I love Tim Cook. I love their management and their innovations. Like, it's the top tier.
So they recently released augmented reality glasses that
Yeah,
were way
little
too
corny.
heavy, way
corny.
too heavy. Yeah. And too expensive. And I think that maybe the third or fourth generation of that technology is going to be really appealing. And it's going to do to consumers what the smartphone did for Apple, like 15 years ago. Before you know it, there'll be a switch where all of a sudden no one's wearing augmented reality glasses, and then all of a sudden everybody's wearing them. And this might be, 5-10 years from now. It's not going to be a quick thing. But the potential of, like, say, walking into a store and having all of the prices of the products displayed on your glasses is pretty appealing. You can have your glasses give you directions. You can have them, like, there's all sorts of things about technology where we want it more convenient. And as soon as Apple realizes they need to push the processor down into, like, your smartphone and have the glasses have basically no processor and very little tiny batteries so that they can last for hours, that is when I think that either them or Google or some of the other players that are into augmented reality are going to find a product that's hot and takes off. And
Or
I don't know
you
who's
watch
going
the
to do it.
Cash Flow Kings.
Yeah, well, they're going to produce dramatic revenue increases, very similar to what Apple did 15 years ago when they launched the iPhone. Dramatic revenue increases. And I don't know which of the companies is going to do it, but Apple has that potential.
Well, while we're on the topic of value investing, I did have a very successful value play this last summer. And Fiscal, we were covering it here on the Cash Flow Kings in the early OG days back over the summer. Target stock. You won't hear some people talk about Target stock these days. They are outperforming Costco over like the last 3 months, since we like to talk about short-term performance here on the channel. But yeah, no, they've had a beautiful recovery. They were trading at like 105 at the lowest. They're up 48% since then. So that's been my value play that I like to harp on. They didn't buy back shares at those prices, which I'm a little sad about. So, like, and Joseph Carlson claims that Starbucks can't buy back shares at these prices either, that they have no money apparently. So that's we'll see. We'll see if we'll see. You want to talk about High Tide? I think it is.
Oh, absolutely. I can talk about High Tide for literally hours.
Go for it, because I saw it's been doing very well recently, and Dissector's happy.
We have some bulls in the Discord that want to hear about it. So
cool. It's up about 65% or so in the last year. The cheapest shares I managed to purchase, I purchased at $1.04. My cost basis is around $1.75 or so. I own it through multiple brokerages. So I fell in love with this business model a couple years ago. They operate sort of like a gas station. So a gas station has you getting in the door to buy the gasoline, you buy the cigarettes and the lottery tickets. And then while you're in there, they make all their money when you buy the junk food, the sodas,
the bag of chips. Yep.
Yeah.
Yeah.
So this is a cannabis retailer. They sell the actual cannabis as a loss leader, meaning they barely make any money off the cannabis itself. But they make huge profits off of the glassware. So while you're in there buying your weed, you go in and you also buy bowls and bongs and all that stuff.
The weed munchies are real too. You'll spend more if you smoke.
I have heard this repeatedly. Yeah.
Yes. You're not on the Cash Flow Kings. Yep.
So in early 2021, the entire sector rallied super hard. And I decided that this industry was very cyclical and that I needed to start studying it because I wanted to get in on the next upswing, right? So I also knew everything was overvalued at the time, so I was under no pressure to begin buying immediately. So I started studying the industry. I started studying a bunch of different business models, and this company stuck out like a sore thumb because everybody else was vertically integrating, growing the plant and selling it to customers. And this company was busy vertically integrating the glassware. So they import the glassware from places where it's cheap to produce, like Malaysia, Indonesia, India. And then they ship it all the way around the world to North America and to Europe, and they sell that to Western culture. They sell that to us. And the margins on that happen to be just eye-popping. They're paying $2 or $3 for a glass piece, and they're selling it to a Canadian for like $20. Fantastic margins. Their discount model draws in customers, like because they're selling basically at cost cannabis. And so they have a history of capturing market share, increasing revenue, and driving everyone else out of business. One of the reasons I chose a Canadian company over a US company is because Canada is a much scarier jungle. So more threatening, more dangerous ecosystems tend to produce scarier apex predators. So this company was born in a gladiatorial death match where everyone else around them had like negative gross margins. They're hemorrhaging money. So Sundial got so desperate they bought a chain of liquor stores. Tilray got so desperate they sold off all their retail stores and started growing vegetables. Like things got real bad for the industry up in Canada because the wholesale price of cannabis tanked so hard because there was too much competition. There was too much production. If you're a producer and you want to grow revenue, the only way you can do that is if you grow more. So everybody had that stance where let's just all grow more, and they're all fighting for the same customer base. So all of the LPs, the licensed producers up in Canada, they're all stuck with this like death spiral of trying to undercut each other's prices. And this is the only company in either ecosystem, in either the US or up in Canada, that does not care what the wholesale price of the cannabis is. Because similar to a gas station, they don't care what the price of gasoline is. All they care about is that you come in the store and you buy some soda and you buy some junk food, and that's it. That's all they care about. So this store sort of has a similar business model to a gas station. I waited about 20 months before I began buying. I'm a very patient person. So I studied the industry in early 2021. About 4 or 5 months later, I decided, hey, this is a company I'm probably going to one day invest into. Sort of like my attitude on Dutch Bros. I might very well buy Dutch Bros in a couple years or something. So I just patiently waited and patiently watched, and the share price eventually fell down in the gutter, and I started accumulating. And
Man, I could never be that patient.
well, I was fiddling around with some other stuff. I was buying other investments, and I most of 2021 I was teaching myself how to trade options really well, and that kept me pretty busy. That kept me from buying a lot of stuff because I was busy using the money on options trades. So this company is hyper competitive. They have a strong history of running other people out of business. Customers love them. The CEO is a shark, and I don't mean he's just a good salesman. Like, he's extremely competent. These are qualities that I look for. It's currently trading extremely low compared to its intrinsic value. I have a phrase. I'm not sure where I got it from. I may have already said it once during the stream. You buy damaged stocks, not damaged companies. Right. So if a share price goes down on something, you have to get the question answered as to why did it go down before you can buy, or even before you can make the decision to sell. Right. Like, so why Starbucks went down.
Yeah.
It's not a mystery. You know what's going on. And so you have to answer the why before you buy or sell. You do not buy damaged companies. You buy damaged stocks. And
hear that, fiscal?
Yeah, you hear that, fiscal? That's right. So you want to look for instances where the share price is dramatically lower than what it should be. And you want to look for a long-term story that's positive with a short-term story that's less positive, right? And so you have to also be willing to sit there and earn lackluster returns. So last year, while accumulating...
I'm good at that.
Yeah, you get that. Right. So last year, while accumulating high tide, I was only up about 8% by the end of the year. I did not beat the market. That's fine. I don't mind. In the last year, we're only 4 months into this year. If you look at high tide 1 year chart, it's up like 65% or something.
Mm-hmm.
Yeah.
And this is because they have been improving their margins, and the market is finally starting to realize, yeah, look at that. Look how cyclical. Click on the 5-year. Look how cyclical this is. Super cyclical.
So what is your like ballpark, like intrinsic value on high tide?
Depending on what method I use, I keep on coming up with numbers in the $5 to $7 range. And a couple times I've come up with stuff around $9, but I try not to be as bullish as
like, so you're thinking like 2 to 3x probably somewhere.
So if another one of those rallies happens, so pull the chart back up where they went to like $11 a share or something like that.
Yeah.
Since the last rally, they have tripled their revenue, but the share count has basically doubled. So right there is if another major industry-wide rally hits, right there, it could theoretically end up about 50% above that. Okay. But the last rally was fueled purely by hope and hype.
Not
And
by
this,
the numbers, huh?
not by the numbers, yeah. And this rally, that we're, I believe, at the very beginning of, is fueled by an actual change in the laws of how cannabis is treated in the United States.
Altria.
Yeah, yeah. And so I keep telling people that, I mean, don't get your hopes up, and don't get pissed at me if it doesn't reach this. But I'm expecting the next major industry-wide rally to carry this in the $15 to $30 range.
Oh,
Yeah, huge potential upside. They have improving margins. They have a very strong business model. They're positive cash flow. And if you do a discounted cash flow on this thing, even the DCC says it's undervalued. You know, Peggy says it's undervalued. Modified versions of Peggy say it's undervalued. So in addition to PE and dividing by future earnings per share, I will also take a look at their EV to EBITDA and divide by EBITDA growth, or their price to cash flow and divide by cash flow growth expectations. And that is why I'm saying, depending on which version of the Peggy I'm using, or what numbers I choose to plug into the DCC, I get some pretty attractive values for intrinsic value. And the industry has a history of taking the share price on cannabis companies way above their intrinsic value. Like, they go from the gutter to the moon, back out in the gutter, back to the moon. They've done this twice already. In 2018, there was a massive industry-wide rally. In early 2021, there was a massive industry-wide rally. And the federal government just announced that they're rescheduling cannabis to 3. So I think that we're really close to the beginning of the next one. I haven't felt FOMO like this in a long time. Like, this week, I'm like, man, I got to hurry up and buy more shares.
I haven't seen any 3 stocks to buy right now super deep discounted videos, so I'm probably not going to touch it myself, but you never know.
I understand.
Yeah, that's interesting.
Well, you're making me want to look into it more.
Well, take a look at it. Go read through the earnings call transcripts. Go watch a bunch of interviews by the CEO. We had Capital Mindset come on, Brewing Great Returns, and I gave him this like 25 minutes pitch about why I'm so bullish on the business model, and he went and he bought some. And if I can talk Capital Mindset into buying some,
it's funny. Maybe I talked him into buying Grab.
Okay.
Oh.
Okay.
I gave him a pitch on that. Like, it was after one of our he came on our show recently, and we talked for like a few minutes after about Grab, and like he ended up replacing his Uber stock with it, I guess.
Sure.
I was throwing up upstairs.
Yeah. Have you looked at Grab at all?
No, I have not. No.
Throw it out there. Okay. All right. It's basically like if you took Uber and merged it with something like PayPal or SoFi, and then threw it into Southeast Asia, Singapore, Malaysia, Myanmar, Vietnam, Thailand, the Philippines, Cambodia, I think too. I think that's all of them.
Well, I don't expect Uber to go try to compete with them in Southeast Asia.
No, they won't. Uber's a shareholder. They traded basically the right to like operate there for like a stake in the company, so that they don't have to solve, because there's some unique sort of things that you have to get around to operate in those countries.
Yeah.
And Grab has workarounds for it. And Uber was just like, we don't want to deal with this. We'll go back to like dealing with the US and some of the other markets, and, messing around with our stupid low margin freight business that sucks, and let you guys worry about Southeast Asia. And it looks like they've just lately, especially after like a lot of the COVID stuff has sort of eased up a bit, they've been killing it.
Good.
And, I look at the per capita GDP growth in most of the countries that they're in, and like that hockey stick line that says that, hey, we could see like a growing middle class, more urbanization and stuff. And, what will that mean? Probably more customers. And there was like a news article in the Philippines. I go there sometimes, and I've actually used the app, so I have the boots on the ground. DD works just as well as Uber. Works just as well as Uber.
Cigar about right there, baby.
And they've got it's a super app, so they've got their food delivery, their ride share, and their online wallets and bill pay and stuff like that, all in one app on your phone, right?
So, where are they headquartered? Are they in the US?
Singapore is the headquarters.
Singapore. Okay.
Yeah.
Okay.
Yeah. So it is. You get like that Southeast Asian emerging markets like benefit, but not the same risk as if they were headquartered, say, in China, where everybody's pretty worried. So I like it from that perspective. Singapore is, like, I would say, a pretty capitalist country, very high
hyper capitalist
capita GDP. Yeah.
Yeah.
So I feel good about that. And yeah, it's just like I have trouble finding things not to like about it. That's been like the struggle. The only, like, I read one of the bear cases on it on Morningstar, and it was something like the bear case is like a big conglomerate with deep pockets comes in, and it's like, well, the only conglomerate with deep pockets in that industry is Uber, and they own a stake and aren't interested in compete. So that seems like a non-starter. So
Yeah.
I'm looking at it and like, what is not to like here? So I don't know. I'm thinking I keep just getting more and more shares. I just can't stop.
Okay. If you have the conviction, do the buying. If you're in love with a business model and the business model is truly competitive, then it should do well over longer time frames.
Yep. Well, I'll put it this way. I feel like it's the good parts of Uber without the absolutely awful freight business that they keep messing around with. And I say that as somebody that works in like logistics and supply chain. The Uber freight like business model is just it's like basically taking shareholder money and dumping gasoline on it and putting out your cigarette in it and seeing what happens. Basically, it's terrible. Even when the freight market was good, and it's bad right now, by the way, cyclical, and right now it's bad. Even in a good freight market, they weren't really making money. So, like, what's the point? Like, I don't understand why they keep messing around with it.
You guys see Strongman did a video on Camaro this week?
Yes.
So
guys,
we can
something
talk
might be
about
happening
Camaro
with
and Yield
Strongman
Max
on here soon.
I think we should. I think we should.
So I got banned from Camaro's Discord for talking about how those ETFs need hedged. And that is basically the most ridiculous reason to ban somebody I have ever come across. I still feel kind of slighted by it, where I'm all like trying to get them to take risk off the table. And, because I was telling them to hedge it by buying puts. If you buy basically at the money or slightly in the money put, then you won't care if the share price goes down because you'll be delta neutral. You won't lose any money and you'll still get to keep collecting those distributions. And they just weren't having it. They took it like a personal insult that like their investments were bad. And I'm all like, it doesn't matter if your investments are bad. If you hedge them, you'll do just fine because the distributions paying out will be higher than the cost of the put. You can think of the put like insurance.
Yeah, so, that's what a put is. It's price insurance.
Yeah, it's share price insurance, just like homeowners insurance or car insurance or any of that. Why would you not buy insurance on a risky asset? I have no clue.
It's not risky at all. It's a great long-term investment. Keith,
would you want $7,000 a month?
Yes, sir. You have to do it, Keith. It's like The Office. We have to it's a weekly recurring thing. There's updates. I mean, there's news we got to talk about. See, people love it. The people want it. It's past 9 p.m. Anything can happen on the Cash Flow Kings. Actually, 8:58. My bad. I didn't.
8:58. So I can start cussing now.
Yeah, we can. I broke that rule.
Hours
After. Yeah, anything can happen. Cash Flow Kings after hours, but. Yeah, we even got fried muffin. How about y'all grab my nuts? Like you got the stock ticker potential. Yeah, the Camaro thing. That's wild. I mean, I think Strongman. I think he was like actually surprised of how like stupid Camaro was. And
yeah. And I think like one, I think it was Capital Mindset that said that he thinks that Camaro views himself as like an inspirational figure for people.
Figure. We all didn't have.
Like he's like a high yield dividend Tony Robbins, or something self-styled, of course.
We are having this guy on and Yield Max TV. You need to do the Tesla sandwich and Crush and dollar amount. They will both outperform and kick out dividends. It is free money, so I have nothing to say. It's free money. What are you gonna do? You have Lambos. We don't.
There's no free lunch in the stock market. That's not how that works. Even the most fantastic investment is not risk free.
Yeah, we are not dragon fighters. We are not high income warriors.
I've heard that if you just believe in the high yield dividends hard enough, that you'll retire by the end of the year, even if you are janitor.
I just exploded.
I know. I added that today, Fiscal. I had some time. I was
Good,
working on a
good.
few videos. I'm like, all right, why not? The soundboard continues. Yeah, it's like The Office, man. It's so entertaining. I made a funny Civil War meme.
The thing I love is like when he talks about how he discovered high yield dividends. That was he's Indiana Jones, like, and he found the artifact, or he's a paleontologist that just uncovered like a never before seen skeleton of a dinosaur that like he can get named after him. He discovered high yield dividends.
He discovered it 9 months ago. That's what he discovered.
He discovered it. Wow. And since then the world has changed.
Oh, the funniest part, I was watching Strongman stream, right? And
yeah.
This is hard. He's like, and Kamir's like, all the haters, I don't see them anymore because all of my yield max are up. And it's like, because you banned them all. Like, that's why you never hear him talk anywhere. Yeah.
Well, at one point, like a couple weeks ago, I was watching a Khmer live stream, and he said something like, "If any of you can get in here and help me do this math, I would appreciate it." And my internal dialogue was like, "You already banned everybody who knows how to do that math."
It's like, how? It's how do you do?
Yeah, it's like well, that's the problem, Khmer. If people knew how to do the math, they probably wouldn't be doing what you're doing.
Yeah.
Yeah, so Blake, I don't know if you're familiar, but we do have a betting thing on my Discord of when he will get margin called. We have one that's gonna get margin called, and one when his channel gets shut down, and like he actually has like some repercussions.
Do you mean the big margin call where his account hits 0, or do you just mean Charles Schwab calls him up and says deposit more money or else?
We mean forced liquidation.
Okay, because they have already done that to him. If you notice during like over the last 2.5 weeks. Leading up into the Tesla earnings report, he was forced to sell off his Rivian. Mm-hmm. He was forced to sell off a couple of other things, and he gave no explanation for that.
Like, I noticed a couple of the tickers he had disappeared conveniently.
Yeah, they just conveniently disappeared, and he's just not mentioning what happened. And meanwhile, you're watching his margin like ladder up, and his account value tanking, and he's selling off positions. And all I could think is like, I wonder why he's having to sell off positions. Perhaps because he's getting a morning phone call from Charles Schwab like every day during this entire downturn because he's over leveraged.
I might have to take out some margin to buy the Starbucks tip if it gets into the 60s. Ryan goes 25K in margin. He goes all out Starbucks. The end of me.
I don't hate when it comes to margin, like the thing I would do is sell puts on margin because you're not charged any interest until you get assigned the shares. And so that can be a way, like, especially if you're conservative with it, like a kind of low-ish, depending on what you're selling the puts on. If you're doing them on my stocks, you're probably getting assigned. But it's a good way to maybe like earn some premium but on essentially borrowed money, but not have to pay interest on it necessarily. Yeah. So that's something I've done it a little bit on Robinhood, but thinking about unlocking that on Schwab eventually. I don't know.
But I hear Fidelity also offers that, where they won't charge you for the cash secured put if you sold it on margin until you get assigned.
Yeah, and I think like, I generally am kind of cautious about things like margin, but I think like as long as you don't go too deep at once, that you can kind of keep it to a reasonable level, and it's probably a benefit.
I think most people could probably use about 10%. Like so the higher in percentage you go in margin, your risk goes up exponentially. Mm-hmm. And Khmer's hovering at about a 1-to-1 ratio.
Yeah, he's all maxed out basically.
Yeah, which is ridiculous. And so I think
max, by the way.
Yeah. And I think most people could pretty safely employ about 10% margin. So if you have a 50K account, 5K margin, not that unreasonable, So a big part of why I say that is because I'm old enough to remember the .com crash, and I watched people lose like 95% of their investments on a couple.
I was a kid, but like I definitely remember seeing the adults in my life like talking about like some of them like losing like half their 401k and stuff in different instances. Like it was brutal. It was brutal.
And that's why I've been averse to margin and risk focused ever since. It is also one of the reasons I don't like using relative valuations. Comparing company A versus the rest of the industry, company B, company C, it does not give you a clear picture as to whether or not this is a good investment. It only gives you a clear picture if it's cheap or expensive versus the rest of its industry. And that watching the .com crash and watching people buy companies that were dramatically overvalued but still undervalued compared to the rest of the .com industry, it taught me a huge lesson. And that's one of the main reasons why I stick to value investing, calculating intrinsic value. I avoid crypto, not because I don't think there's money to be made there. There's plenty of money to be made there.
Sure.
But I refuse to invest in crypto because I don't know how to calculate its intrinsic value.
Yeah.
I don't know.
And here's and since you brought up crypto, like,
Sure.
I've been thinking about, like, so I recently had someone join our Discord that he made most of the money he's investing now by basically, I guess, trading crypto. And I told him, like, hey, like, good for you, congratulations on on profiting, but I would have to say that I think anybody that made their money on that, one or a combination of maybe like three things might have happened. One, you just got lucky and bought at the right time and then sold at the right time. Hopefully sold, didn't just hold it, and you're not a hold on for dear life type. Two, you have some type of edge with regards to maybe like chart reading, and
Sure.
you're doing some kind of technical analysis that gives you a slight edge, and a few trades happened to do really well while you were doing that.
Yeah.
And you were disciplined and all that, and it paid off. The third is that you are part of some type of a rug pull or pump and dump type thing, and you just took advantage of a bunch of idiots that think that everything is going to go to the moon for free, and we're all going to ride the rocket together, and you got out and left them holding the bag. Yeah. So those are the three ways I can envision somebody, and it has nothing, because there isn't an intrinsic value to a crypto coin.
Right.
I have asked every person that claims that there is, like, okay, tell me what your valuation is for Bitcoin and how you calculated it. And that dial-up modem noise where it's having trouble connecting, like I see that, like, kind of going, and I get usually like nonsense or just no real actual answer.
There's no real answer to that. Nobody knows how to calculate the intrinsic value on crypto. So when I meet people that made a bunch of money on crypto, I ask myself those same three questions. Were you lucky? Were you part of a pump and dump? Or are you actually a reasonably good trader? That's another viable option. It's very difficult to get good at TA to the point that you can actually make money on it. Like, I can teach all you guys about support and resistance and certain candlestick patterns and all that stuff. If you want to get into TA, and this is great for value investors, like both of you are into value, look at both of these books right here, this one and this one. Both teach how to read charts when you put volume on the y-axis instead of the x-axis. And you get so much more information about recent accepted fair value, and you get a lot more information about momentum and sustainability and where support and resistance really are. It's called, why can I not think of it? Market Profile. Look into Market Profile. It definitely helped me figure out where bottoms and tops are. It helped me establish not intrinsic value, but fair value. They're sort of two different concepts. Intrinsic value is based off of the value of the underlying. Fair value is based off of where price is recently accepted. So if you're a trader, you want to focus on fair value. And if you're an investor, you want to focus on intrinsic value. And a lot of people sort of use the words like interchangeably, but they're kind of not, they're kind of two different things. So definitely this is Mind Over Markets. It was written by, I can't even remember his name, James Dalton. And this is Stittlemeyer on Markets. It was written by J. Pedro Stittlemeyer. Sort of like how calculus was invented in two different places, like Germany by Leibniz and Newton at the same time. These two guys were both working in the same building in Chicago. And at one point, like a mail boy or a lunch delivery guy walked into one of their office, and he's like, "Hey, are you working on the same stuff as that guy up on the 5th floor?" And the other guy was like, what are you talking about? And then he goes up and he pays a visit to the office of the guy on the 5th floor, and he's doing exactly the same thing. He's throwing volume on the y-axis and looking for additional information based on that. And so these 2 books really helped my trading. I'm still not super good at trading, but they definitely helped me kick it up a notch.
We have YieldMax TV in the chat, and we're having him on a few weeks, as I mentioned. So and he owns a Lambo too, and he has a gold digger wife, which I watched on his channel too. We're doing due diligence here. This pays me $14K a month, and his margin is $2,200 a month, and my NAV stays stable. We will definitely be talking about that on Cash Flow Kings 2 weeks. Be there, be square. Going to be in a big episode.
So he's in NVDY. So what's his plan when NVIDIA goes down?
Oh,
yeah. What do you think is going to happen to NVIDIA? What do you think is going to happen to NVIDIA when news gets out that Nancy Pelosi exited her trade? Yeah, that's going to be a drop right there, because millions of market participants are all going to go, oh, Nancy's out, I better leave too.
You have Dirty Nancy. She doesn't like NVIDIA. She isn't running NVDY. NVDY they call it these days. You don't buy NVDY. We don't like that. Fiscal, it's true you're in Italy right now. Everybody's saying you're in Venice.
Actually, yeah. So this is actually a picture I took outside the Airbnb. I had a nice balcony when I stayed in Venice for a few days, and I took this wonderful picture, and I've decided to use it as my background for now. But as some people might know, I am shopping for a condo to set up my YouTube studio in one of the rooms, and until then, we get Venice as the background.
Sure,
there we go. Yeah, you got to get like a wild background too. It's got to look all nice. Technical analysis does not work in crypto. We're gonna talk about this in 2 weeks, everybody. You all better be there, be square. It's gonna be real. We'll be talking shit about all of the channels. So it's gonna be good.
I disagree with that guy. TA, when done correctly, will work with literally any market. Yeah, not just highly liquid markets. It'll work on homes, real estate prices. It'll work on used cars. It'll work on everything. You just have to look at it correctly.
Y'all are haters. You don't understand the ultimate power of income. By the power of commands, we will thrive. Oh, I can't do that, dude.
Well, Khmer doesn't understand total return.
I don't think he understands return. Yeah, I'm never getting into technical analysis. It's too much for me.
It's a dark path to go down if you convince yourself that you're better at it than you really are.
Yeah,
you can lose a lot of money.
Picking individual stocks has been enough of a rabbit hole for me. Like every day I get closer to just buying SHG and going away.
But Ryan, there's no YouTube money in buying index funds.
That's true. That's like a strong man, dude. He can't. There's only so much he could say after buy VT, right?
Don't talk crap about VT.
Yeah. All right. Well, we'll hit the 5-minute warning here with Blake. So if anybody has any questions, definitely ask them now. I do want to play the Laxman Armashiran interview for anybody that hasn't seen it yet. It is, let's just say it's something to behold of. I
haven't seen it yet. So,
and you guys, if you guys haven't already watched the same one from 6 months ago with Jim Cramer, it's
night and day.
It's wild. Like it's Kramer's glazing me. He's like, oh, this is great. This is a great company. This is amazing.
Imagine Kramer smoking somebody's pole 6 months ago and then shitting on him today, huh?
Yeah, it's fun.
Imagine that.
All right, I'll pull it up, everybody. We'll play about 5 minutes of the interview, so get ready because this is worth it, like entertainment wise.
It was a very tough quarter. Thank you for having me. There were 3 reasons for this. First, we saw unexpected pressures on our occasional customers, more intense than we expected, that impacted their visitation. Second, the choppiness of the recovery in China continued with a more intense price war than what we expected. And third, challenges of our business in the Middle East that impacted us not just in the Middle East, but also in other geographies.
Okay.
Clearly,
I understand. Now, what I'm trying to figure out, sir, is Why did you not feel the need to pre-announce this shortfall, given the fact in the previous quarter, your CFO said that she felt that you could have a earnings per share growth in the range of 15 to 20%. This is a substantial decline from that. And given the fact that you said on the call that April did not end well, I'd like to know why you did not feel the need to come out and say our quarter is going to be substantially worse than expected at least 4 weeks ago.
I think, Jim, we've been working on action plans to address these headwinds. And so what we wanted to come back with was not just the announcement, but also the action plans that we have in place, which, by the way, are not business as usual. And I'm happy to talk about them.
Well, let's finish, because I know that investors are trying to figure out why they should hold on to the stock. Some of the things that I am confused about. I checked with
this is the part.
Private companies that are in a similar business to you, and no one saw a 3% decline in comp stores because of weather, and none of them saw a negative number except for you. Is it possible that your coffee is just too darn expensive?
Jim, I think that if I look at the U.S. occasional customer, they've clearly cut back on visits to us. If you look at the value for money scores we have, they're still strong. But there's no question that the occasional customer is cutting back on visits to us. We have not been able to communicate to them the value that we provide. So what we are doing about it is, it's not business as usual, but there's an action plan we have in place in order to do that, to reach them and to communicate the value that we are providing. What we're doing for that is we are making it attractive for them to come back into the Starbucks app and join it. On the app, what you will see is value that they haven't seen because they've not been part of that environment. There are drops that are going to happen every Monday. There are bundles that we're putting in place that are attractive for them. For example, a beverage and a drink at a certain price. And so what you're seeing there is the effort we're making in order to ensure that our occasional customers get to see the value that we provide.
Why did the loyalty program go from 34.3 to 32.8 in linked quarter? I mean, those people are not occasional. Those people are hardcore. Why did your membership, and I know your membership was up 6% year over year. I'm not concerned with that. I'm concerned with linked quarter. Why you had not the occasional, but the hardcore drop off.
Jim, if you look at the most loyal customers, they actually continue to come in. They continue to buy as frequently. They continue to customize and upgrade. It's at the tail of the loyalty program, particularly those that are, in the 90-day active, as we call it. The folks that didn't come back, they, again, are very similar to the occasional customers. We have an action plan in place right now to communicate directly with them with offers that have gone out even as recent as this week in order to ensure that we can reverse the visitation losses that we have seen with them and to bring them back. And yes, you're right. Overall program did grow by 6%.
Right, that's necessary. But what's more important, I think, is the linked quarter decline. Now, let me, before I turn it over to my colleagues, you said it's not business as usual, and I want to make a point here, sir.
Here we go.
You are still expanding as if it is business as usual. You had, for instance, on the quarter, you talk about opening stores in Honduras and Ecuador. Is it not time to pause, sir, and figure out what's really going wrong and spend a deep dive and making it so that this decline in comp store numbers does not continue? Because it is perilous to the actual existential existence of Starbucks.
Jim, thank you for the question. I want to tell you is, if you look across the world, our system sales in Latin America expanded double digits. Our sales in Japan expanded double digits. Our business outside of Malaysia and Indonesia in Asia Pacific.
You said you were not holding share, sir. I regard them as being seminal companies that are just as good when it comes to McDonald's says you are losing share. I can't go against those three companies. They are too good and too honest and too big for me to dismiss.
We are the leading category player in coffee. I'm talking visitation share and what we have. If you look at our in-home coffee business, it grew share 140 basis points. But if you look at the business underpinning us, tea grew 8%, cold grew 1%. So there are elements in here. If you look at our partner sentiment and what we have inside stores, attrition is down to its lowest levels. So there's work going in. The thing we didn't do enough of is really attack the occasional customer with delivering and communicating value to them
The
in a
value.
more aggressive manner. That's what the plan we have does.
No, it's not the value. It's that they didn't
Luxman,
communicate
it's
it well
David.
enough.
China continues to be a not unimportant
So that's
part
the
of
one from recently, and now this is the one from yesterday, and this is one from 6 months ago. The switch around is like,
Did you know
absolutely
Kramer looked like he was
insane.
getting mad.
Dude, because they own the Kramer Foundation. I'm pretty sure owns Starbucks. Because look at
This
how
is
like
critical to the existential existence of Starbucks.
everybody. This is 6 months ago.
Is a tea drinking country when we went there in 1990.
Look at Kramer.
Howard went there. He said, I'm going to commit to building the specialty coffee industry.
Kramer's in love.
So what are we doing now?
It looks like he's about to get
We
ready
are
to
helping
get on
them
his
grow
knees.
coffee in Yunnan. We just opened this big factory
To the point where Kramer's talking.
And after 24 years, we've moved the per
He's got
caps
the goo eyes.
to 12 cups per
Look at
person.
Kramer.
So think of it. Japan's at 280 and the US is at 380. If you go to Shanghai,
Yeah. So I want to ask everybody in the comment section too your thoughts on this, because I was seeing people who were saying they want like a more laid back CEO like Jamie Dimon, right? Somebody who's like down to earth, they just get the point across. And then there's some people who like Laxman, the way that he presents himself, but they also feel like it's a little scammy, it's a little grifty. So
So
what
it's-
do you guys think? Would you rather prefer like a CEO who's like more mellow, or one like Laxman where it's like very salesy?
I prefer CEOs that are honest but ruthless. You want to look for someone who's super competent and who wants to, like, the targets they set are both reasonable and amazing, and performance targets, not like share price targets or anything like that. You want someone who's going to helm the ship well. You want a good pilot. You don't just want to look for a good salesman. So many companies have gone under or done poorly with a good salesman at the helm, and you want someone who's actually good at captaining that ship.
Definitely.
We got to talk about it in 2 weeks, man. We got to talk about it. YieldMax TV. Will there be a YieldMax for Starbucks? We will see. Starbucks is going in energy drinks. Yeah, I mean, like, I think like it's easy to say when times are good, you know, you're happy with how he talks or whatever, but when times are bad, I think that's also another kind of switch up, you know. Fiscal, what do you prefer?
I prefer CEOs like Ed Aldag.
All right, that's enough.
What company does he run?
MPW.
Okay.
Yeah, I think the funniest thing was after Kramer's like yelling at him, Jim, thank you for the question. That was the best. I think that was the best part for sure. I did ask a few people if they wanted some last questions. PP asked this one.
Oh, sure.
Yeah.
So in 2018, when Canada legalized, Hope and Hype took over the entire industry, not just companies in Canada. And both the US and the Canadian cannabis sectors rallied super hard. And the reason why, and it happened again in 2021, when Biden got elected, he'd made some campaign promises. People thought he was gonna do it sooner rather than later, because both the Senate and the House were controlled by Democrats and the White House. So it sort of looked like it was going to happen at the beginning of 2021, but that didn't pan out. So the industry is super cyclical because there's a lot of potential for what's going to happen in the future. And I mean a lot of potential. Like, this is similar to investing in alcohol right at the end of Prohibition. Like, what the industry looks like 10 years from now is fantastic. And what the story looks like between now and then is unclear. And so a huge number of people are only looking at the fantastic potential of the future without looking at the present day risks. And so this is how you end up with a bunch of people that are investing into hot trash businesses just because they're in this industry, because the industry as a whole has a bright future. It's got a really high CAGR, compound annual growth rate. And when you have really high CAGR industries like big tech, software services, stuff like that, people will rationalize buying at ridiculous prices because they know that there's a bright future ahead. And if they just buy these shares and wait, things will probably turn out fine. So that is why the cannabis industry is so super cyclical. And it's basically independent of what the companies are doing, how strong their financials are, how strong their business model is, any of that. anytime it looks like it's about to become legal or we get a positive sign toward legality, the share prices go through the roof. They go from dramatically undervalued, trading in the gutter, to dramatically overvalued, euphoric rally. Makes no sense how high it goes. And that's just the nature of this industry. And that's actually what drew me into it, was like the knowledge that eventually this industry is going to go in the gutter. And then I'm going to try to choose highly competitive companies that are managed really well. And I found High Tide. And then I'm going to ride that back into the next mega rally. And I'm patient, as I waited 20 months to buy. And so I'm going to be patient until this next rally occurs. I don't know, could start next week. The DEA just announced last week that they're going to Schedule 3, and that's a long process. Governments don't do stuff fast. So I'm FOMOing into as many shares as I can right now, because I have a sneaking suspicion that a year from now, I'm not going to want to be buying. I'm going to want to be selling. So I'm sort of like my timetable where I can accumulate is going lower. So to summarize, the hope and the hype is real. And the reason that it's there is the same reason why the industry goes up into euphoria, for basically no good reason. Just because it looked like it was going to get legalized because Biden got elected is not actually a good enough reason to go buy shares of a hot trash company.
Yeah.
Like Sundial, Aurora Cannabis. Tilray has an excellent looking business model, but their financials are horrid.
Have you looked at Kronos at all?
Huh?
Kronos.
Kronos is,
baby.
They have a lot of money, but they're not operationally profitable. So what am I going to do with something that is operationally unattractive but has a fantastic looking balance sheet? I'm not going to touch that.
Yeah.
I'm into competitive business models. I'm into companies that are attracting market share. They're drawing in customers. I'm not interested in the balance sheet. I'm interested in how efficient is the company, how efficient is the business model.
I think that's probably why Altria abandoned the last round of warrants that they had. They were like, if something good happens, so be it, and we'll keep what we have. But this isn't, a good use of.
I think Big Tobacco is going to start buying up cannabis companies as soon as it makes sense to. Not too long after they're legally allowed to. They're just going to start coming in, and they're going to buy up a significant chunk of the cannabis industry, and then we're going to see the cannabis industry get managed by extremely experienced tobacco operators that they know how to deliver a product to customers. They know how to improve margins. Yeah, and so that phase has yet to occur. But maybe big alcohol will also get in on this.
I think that's where it's going to.
Yeah. And when that happens, if High Tide gets bought up, I might become a shareholder of Altria Group or British American Tobacco or something. It's quite possible. I sure hope they don't try to replace present management. That's one of my bigger fears. Is the CEO of High Tide is super competent, and if they replace him with somebody that is not super competent, I'm out. I will leave. That is sort of a no-go for me, especially if I find out that the new CEO is unethical or ran the last two companies into the ground or is from a completely unrelated industry and doesn't actually understand what they're doing.
Rosalind Brewer is a free agent right now, by the way.
Starbucks can have her back, dude.
Yeah, we'll pass double and pass the next. How about that? All right. Wow. Hour 35 in for the 30th episode. What a treat. Blake, looks like all the time we had today. This was a treat. Hour 35, just nonstop conversation. I actually saw we had a peak of 69 total people in here. I got a screenshot of it.
Nice.
From Twitter, YouTube, Twitch. It's a blessing to have you guys on.
That's my favorite number.
I would be happy to come on again, but every time you have me on, I'm going to ask you how many of those books you've gotten read by then.
I can't read, so that's
you can't read.
It's a joke. It's a running joke. It's a running joke we have here.
I need to, at the very least. So I bought One Up on Wall Street and Common Stocks and Uncommon Profits. Yep. So got to finish one up first, and then I'll move on to the next.
Hopefully, I covered it earlier.
When you're done with Common Stocks and Uncommon Profits, read The Dondo Investor by Monish Babrai. That's the third one.
I do love Monish. So
he's a great mentor.
His interviews are gold.
Yeah,
I've seen
this summer. I'm going to be reading Uncommon Stocks and Common Profits. So I'll do the audiobook.
Yeah, everybody thinks that this book is the playbook Warren Buffett's been using for like 7 decades. It's not. That's what he used for the first decade or so of his investing journey, and then he switched to the Philip A. Fisher style of investing, where it's basically common stocks and uncommon profits. That is the playbook that Buffett has been using for decades.
Blake, plug anything you need. I know you got the Brewing Great Returns podcast.
Yeah. If any of you want to check out my material, I'm on Brewing Great Returns here on YouTube. I have my own YouTube channel that's just educational. I don't make videos very often.
Link in description.
Sure. And then I also am a Seeking Alpha author. So if any of you want to find me on Seeking Alpha, if any of the audience wants to understand my efficacy, like you want to see my credentials, you can look me up on TipRanks. I'm currently beating about 95% of the world's analysts. And a big part of the reason why that's possible is because I only look at smaller companies with huge growth potential.
And that's going to be 96% soon.
Yeah.
You mean to say you're not going to beat 95% of the analysts by buying Apple and Costco stock?
Correct.
Yeah, Vici.
Correct.
It's weird. Stocks to buy undervalued. Okay.
Hear that, Joseph Carlson?
Yeah. And I'll write about any company that's in my circle of competence, but personally, I only buy like small caps and micro caps for the most part.
Yeah. All right. Absolute pleasure once again, Blake. Thank you for coming on. We will have, I'm sure we'll be on Bring Great Returns again. We want to have Andre on sometime. We'll have all you on. It'll be an absolute treat though. Thank you again, Blake.
Thank you.
We'll see you.
Always a pleasure.
All right, Fiscal. You know what it is now. Is
it time?
I think it's time. So if you guys didn't already see, it's past 9 p.m. It has been for a while.
We're well into the after hours portion of the show.
Yeah, we are into the after hours. And if you guys didn't already see, I would be addressing the situation tonight. I'd be, I really, we have made some subtle jokes at it over the last couple of weeks, but we haven't really directly addressed it. I think it's all right because we pride ourselves on being transparent. We're never gonna try to sugarcoat around anything. So it looks like for the foreseeable future, Double D's will not be coming out of the Cash Flow Kings for a while. If anybody wants me to explain the entire situation, I will. But in all seriousness, time to get real here for a second. It's unfortunate, I felt it was one of those situations where it just felt like it was never going to work out. I sound like I'm gay right now, but it just feels like it was one of those situations where it's differentiation of personalities. One of us earns our money, one of us doesn't. It's unfortunate, and for somebody that I truly gave a lot of resources to, I put a lot of time into, helped a lot, and for him to pretty much come out against us, block my account at least. I don't know if he's blocked you, Fiscal.
He hasn't blocked me or done anything. Hasn't done anything against me. So it's clear that the beef is only on one side of the. Yeah.
It was one of those things that kind of built up over a few weeks over on the Discord link in the description. Let's just say Ryan had it. The cut got to Ryan, and I was waiting for Fiscal one night. He was talking with Fabio.
I was pitching Fabio on grab stock, man.
And I was waiting for Fiscal to come to the weekly recap. I may or may not have had enough of it and made a heat track. And it's unfortunate. You hope these things work out. We're way too small in channel size to be beefing like this, but it's unfortunate. It's true when people start to actually see money and views or whatever, even if it's 1,000, people will act different. So it's unfortunate, but it is what it is. So I figured we'd address it here, be honest, be transparent about it. But for the 30th show, I think it is only right if I decide to play our song, which is called my new song, which is called "Danny, Please Come Back to the Cash Flow Kings." All right, you guys ready? Can I get everybody get ready can I get a ready in the chat? Fiscal has never heard this before, so everybody,
you're getting my reaction live.
Yeah. Moat. Crocs has no moat. I know you're salty. I do not care. Your 3 stocks to buy now videos are everywhere. When you blocked me, I started to cry because my stocks weren't outperforming SPY. And then I said, Danny, no. Danny, no. Danny, don't go. I wanna outperform SPY. So give me 3 stocks to buy. Danny, no. Crocs has no more. Danny, no. Need my 3 stocks to buy in the month of May. Danny, whoa. Danny, no. It gets better. It gets better. I wanna outperform SPY. Give me 3 stocks to buy. You never copy. It's inspiration. Money didn't get you in content creation. You did it for the love. You did it for the sport. My essay quant analyst that never wanted more than an affiliate link. I'm sorry, Danny boy, for all the things I've done. Your channel is the bomb. VG is number 1. Walgreens stock is shit. MPW2. Fiscal owns Cigar, but not like me and you. And Joseph. And I was like, Danny, no. Crocs has no moat. Danny, whoa. I need my 3 stocks to buy the month of May. Sorry, I say your channel's ass. Your pics are the bomb. Your editing's gas. Your Twitter is the bomb. It is so cool. So Danny, can we be cool for movie? That's the bomb, is it not? Like you would bop that in the club, wouldn't you?
Yeah, man. Like while I'm getting twerked on by a thought, I could hear myself. You know, I could envision that. Yeah.
Yeah. So it's unfortunate. We tried to get Danny Boy back, but you know, with some of the stuff he's been doing recently, it's very snitchy. You know, trying to block people from going onto the cash flow kings, blocking me. It's not bullish stuff. But
so I don't think anybody's going to avoid coming on the show based on his recommendation. No disrespect.
No, he's reached out
poisoning
to
the well.
He's
poisoning the well.
He's reached out to people like to avoid us. You know what I mean? Like there was somebody who was like, let's get Ryan on. Let's get Ryan on the show. And my buddy on Twitter told him to come out of the Cash Flow Kings. He's like, yeah, me and Dan will come. And Dan's like, oh, I'll be busy.
Yeah, but man, come on.
So then I messaged that guy and nowhere to be found. You know, my replies were getting deleted. So
really
odd coincidence. Yeah, it's.
And who is the guy? Who is the guy that's? I mean, I don't think I've ever heard of him. Is he anybody?
I'll type it in the private chat. Not a big enough channel where it's like we're done for. If anybody wants to hear the first diss track, I'll play it too because it's actually heat. Like Fiscal, you heard it. Like I'm actually pretty proud of how it came out. Like I worked a lot on it. I was waiting for you, so I had like 3 hours. You were talking with Fabio.
Yeah, well, Fabio and I, we're both verbose, so our conversations can go quite long. But like I wanted to have, I like threw out the idea of like we should have a 2-hour conversation about if good companies quote unquote treat their employees well, and he was like, I'm up for that. It's like, oh my gosh,
in there, dude. Got to really work on leaving people wanting more. Trying to end on a high. We tried to end on a high. Guff. It's just one of those things. It was never going to work out. Fiscal actually had a really good, description for it of how I let little shit build up over time, and when you're cutting as well, that kind of adds to it. So
yeah. Like long story short, like I'm more or less the neutral person in this, but the way I see it, is that, Ryan's personality type is to like kind of in the moment let little stuff slide, but like in the back of his mind, it's sitting there like burrowing in. And over time, like because he doesn't react in the moment, like the person will keep doing the thing, whatever it is, doesn't matter what it is. And so another thing burrowing in the back of his mind, each occurrence, until it gets to the point where he cannot take anymore. And then he just exploded. And he comes out with some like really big, like grand, like retaliation.
Yeah, we come for a big time.
And you know, I would say Double D's is, you know, he's a little on the sensitive side.
A little.
I'm being diplomatic. And so like if somebody like really like comes at him, he's gonna take it to heart like really fast and really bad, and like actually be hurt over it. Like, I mean, like really, like on a real, like he really feels it. Like it's not.
I'm aware.
Like, yeah, in his mind, it's not an overreaction to, you know, to block you and any of this other stuff, right? Like in his mind, like it's proportional to, you know, what he perceived, how he perceived what happened. So totally understand it, but I guess like at the end of the day, like your personalities and the way you guys like deal with conflict is like it's water and oil, and it just doesn't mix very well. Which is just it's a shame, because like on paper, you guys are the same age, you have a lot of the same interests.
We had a lot of good times on the Cash Flow Kings. He was one of our first guests, you know,
had a lot of really good I think we had a lot of really spirited and good conversations on here and everything. So
yeah,
I mean, I would hope that maybe someday there can
I hope
be.
he listens to that song and he feels a certain way.
Yeah,
you know?
yeah.
I'm sure he does.
But you know, I kind of, you know, I understand his perspective too, and
I do too, actually.
I mean, I'm not like I hope that he continues to grow and succeed on his platforms, and you know, if he ever wants to come back, you know, I'd say he's welcome.
Anybody's welcome, man. Look at our guest in 2 weeks, dude. Like,
yeah.
It's just unfortunate, you know. From my perspective, like I just felt like you.
But yeah,
you give
I am glad though that we were able to to like kind of share the context of it and be transparent and not just be like he's off the show like Seth from Everything Money, like no explanation. I mean that's not how I do things. I don't like things to sit there with rumors percolating in the background or anything like that. I prefer to just bring things out and say them how they are. So that's how it is.
And you know, as part of that, I do see the comments, everybody. Ryan keeps it a tally. I want more. The first one was crazy. You ask and you shall receive. So I think we will play the official song of Daddy's Money with video evidence. So this is the bad one, everybody. Like
this is the one that made him leave, basically.
And I made this in 20 minutes too, the first part at least. And I actually feel pretty proud of that. What are they talking about? Wow, John, you're late. 150 in, and you're rough. Dividend dude, he left. So
there was a beef, and this is what caused it.
A little too much. And yeah, this is just what, if you've ever heard the slang, the terminology, fuck around and find out. Like, you poke the bear. That sounds corny, but you know, you get the point.
Usually I think Coke is always a buy. I think long term, I usually like to buy it when it goes under 60, giving me an even bigger margin of safety.
I can never be nobody #1 fan. Your viewers are retards, they don't understand. You'll always be a dude cause you'll never be a man. You sold out for views I will never understand. Your videos are copied, your thumbnails are mine. All your shit sucks, it's the same shit every time. Ain't nobody cares what stocks you wanna buy. Calling out DT but you doing the same. Copying my thumbnails and changing your name. I'm the #1, you're a pawn in this game. 24K and I made it was me. Money wasn't given from my mommy and daddy. Calling me a salt, who the fuck you think you are? Can't make your own money, you're not gonna go that far. Followed me to data, really, how did that shit go? Got an email from SA, shit in your pants, bro. Congrats on the affiliate link, really can't relate. You can't make it 5 minutes without stuttering in a debate. Your trades are just copied, your videos are too. Danny, shut your bitch ass up and make a 3 stocks to buy video. Nothing more than a little privileged bitch. You sold out for some money, now your videos suck dick. I was really laughing when I heard you talking out. This is same kid spamming replies on Twitter for clout. Do you folks want to hear something funny? This finance channel doesn't even make his own money. He sold out for views, now his videos are scummy. But let's not remember, we don't do it for the money. When you talk, you give me headaches, put me into daze. Started getting paid, throwing your friendships away. Started getting money, started getting petty, going away. If there's one takeaway, you don't fuck with CFK. Boom! There's more too. Had to bury you. Don't forget who pays your walls. Just a piece of advice, maybe hop off Joseph's balls. You ain't really shit, boy, stop acting like you is. I'm right next to your gravestone and I'm about to take a whiz.
This guy, I don't know if you've heard the second part yet.
Usually I think Coke is always a buy.
You have never met anybody like me, and you probably never will, because you're a cunt. I give you this vagina cream so you can rub it on your snatch, because you're all cunts.
I made that song in 20 minutes, you could never test me. You started crying in 5 minutes, you deleting messages. Then you blocked me, that just showed me you ain't got no testes. Silent posting up on Twitter, really trying to catch a fade. And you're only relevant cause Elon made you pay. You're real transparent, but can't disclose how you get paid. All your content shit, stutter for 6 minutes and walk away. All your tweets are stolen, I'd say your stocks too. But it ain't your money, so scrap that line too. Your only channel member you got was from playing sad. Sympathy selling on my Discord or the affiliate link to be had. You ain't on my level, son. Stick to picking daddy sticks. Started getting really jealous, then you wouldn't hop off my dick. Don't talk about performance because you copy Joseph's picks. You a backstabbing little snitch, don't talk about me again. You're a weak little hoe, your max on veg is 110. You a big J, you know I'm going dirty. You're gonna be a dependent on your parents' taxes at least till you're 30. Danny Boy has a really sick feeling in his tummy. Ryan just told the world his net worth birthday money.
It's pretty good, isn't it?
Yeah, I think that's my first time ever hearing the extended version.
This is a reaction channel at this point.
Yeah, it's that's pretty brutal. I mean, you had to attack the man's max bench too.
You go low on me, I go even lower. That's all I gotta say.
All right.
Howell, this is true. I'm no music expert. This is probably the best. It is.
Yeah.
And Howell, to prove your point, I'm 100% with you. But this is literally like, there's been so many like mini plots with this. Like it was bound to happen. Like literally a month or two ago, we were doing the same exact thing, and I literally reached out to him. I apologized for whatever we were beefing over. I don't even remember how stupid it was. And I literally said, like, when we came back to the Discord, like, life is too short to be doing this stupid shit, but apparently just never got through. So it's unfortunate. 1 hour and 55 minutes. Strong words. Ice Cube would be proud. Instant hood classic. I'm telling you, like, it was I could see, like, we got to, like, you know, like those videos of people in the hood that will do like cameos. We should have them like play that song, Walk Through the Hood. We should do that. Yeah, hour 55-minute mark though. We've gone a long time. Let's talk a little bit about the future of the channel, since we're growing like Danny's net worth when there's a dip on the stock market. You know, it's the Cash Flow Kings is going to the moon.
Yep. It's like birthday money day.
It is. You know, it's a good day. It's in all seriousness. So we like appreciate you guys a lot. 55 people in here still. We're playing stupid rap songs. Like it's. People love the Cash Flow Kings. What can you say? Like it's. We also want to thank our viewers on Twitter right now. We have 24 people on Twitter. That's
a cultural phenomenon. So that's like a total of over 75 watching live.
We had 16. We have 28 on YouTube, 24 on Twitter, 1 on Twitch. So that's 53. So I'm happy about that. That's in all seriousness though, guys. Like it means a lot to us. We've been working really hard. There's been a lot of sacrifice put into this off and on camera. Like there, like, believe it or not, guys, there are some days where we may have things like earlier. I could say this truthfully, personally, like there's some days where maybe, you know, I loaded schedule for the day or whatever. I don't want to come to the Cash Flow Kings 8 p.m. Eastern, but I always come on here and I feel better after, because we get to talk to you guys, get to record songs like that. And, you know, it's I'm serious, like big things for the Cash Flow Kings coming up. Words of wisdom.
Indeed, some could say that we alluded to me condo shopping. You could say that I'm planning on getting a space where there would be enough room for multiple hosts in the same room.
That's true. We could have it be like a rap studio. We could like be recording it. We could have like hoes from side to side. We could have like a bunch of women of the night there. It could be a time. Like,
It could be. You might even say that we could have some in-person lives at some point in the future.
For sure. And also we want to this is funny, but for like I think our 40th or 50th episode, I think we should go like shirtless with chains. Like we could have like the whole pimped out look for like a special episode. We also have CFK merch coming. Spoiler, I'm sure you guys all knew that, but I won't show you guys the designs yet. But Fiscal, I believe, has seen it, and they're nice. So.
Yep. Once we hit tier 1 monetization, we'll drop the merch.
Yeah, and then we'll be able to get the channel members and milk you guys for so much money. It won't even be funny. Like we'll be scumbags.
Super chats and all that good stuff. We'll finally sell out and sail into the sunset with literally dozens of dollars.
Yeah. If you invest in YieldMax, you might get more subscribers. Yeah, that's a good idea. I'll buy Satire Commer merch. I mean, yeah, if he's in jail, I guess we could because who's gonna
I just exploded.
Wait, I gotta pull it up now because you said that.
I just exploded.
Yeah. So well, thank you all very much for tuning in to the end of the Cash Flow Kings 30th episode. I don't know if we're gonna have a guest on next week. I'll look to see if we can have anybody on. Probably we will, but 2 weeks we have YieldMax TV on. That's gonna be interesting, like really interesting. So keep eye out for that. We also have the shorts game on lock. Our slave editor has been at work these last few weeks. Like we actually have like probably 90 or 100 shorts that are just like unlisted or unuploaded. So keep an eye out for that. It will be there. If you guys ever see a short come up on your screen, you're just scrolling or whatever, click on it. It really helps us out.
Yeah. Tell us how like off the titles are too.
Yeah, because some of the
comment.
I don't know if we could say this, but some of them are like generated by someone else that may or may not be a human. And they're a little off sometimes. Sometimes they are, and sometimes we don't have the chance to like go through and manually edit them. So go tell us. All right. Thank you all for watching. Smash the like button, subscribe.
I just exploded.
Do dividends, stocks out drugs. And of course, remember, cash flow is king. Oh, yeah.